Good morning, everyone. Thank you for joining us today. My name is Kara Luzic-Canali, and I'm Vice President of Operations at the Harrisburg Regional Chamber and CREDC. We are co-hosting today's webinar with the Chamber of Gettysburg and Adams County. I want to thank Carrie and Jennifer for setting this up with us. This webinar is being recorded and will be shared. All participants are muted. Following our speaker's presentation, you may ask questions. For questions, you can either type those into the chat or press the raise hand button and we will unmute you. At this time, I'd like to introduce Ryan Gleason from the U.S. Chamber of Commerce, who's our speaker today, and Ryan's going to be telling us more about the CARES Act. Ryan, it's all yours.
Well, thank you, Kara. So again, my name is Ryan Gleason. I manage the U.S. Chamber of Commerce Congressional and Public Affairs for the Great Lakes region, which entails Illinois, Indiana, Ohio, Michigan, Pennsylvania, and Kentucky. I wish I was speaking with you all folks in a little bit better circumstances, but let me assure you that help is out there and help is on the way. As Kara said, if you're going to raise any questions in the chat, please feel free to do so, and she's going to kind of field them. I'm going to run with you through a PowerPoint presentation that I'll share at the end with Kara and whoever else might be able to provide this to you all. And Kara, at any point, if you can't quite hear me, feel free to, raise that.
Sure.
Okay, so the CARES Act, which was passed 2 Fridays ago, just to give you an idea of the scale, the CARES Act is a $2 trillion package. It's just under 10% of our regular GDP in our country. This package is designed to be robust because the idea is that this is the bridge that helps us avoid a prolonged recession and downturn. And allows that once regular commerce can begin resuming, we can move back to normal commerce. In addition to the $2 trillion in face value of the package, some of the funds can be used by the Federal Reserve and can be leveraged to provide an additional $4 trillion in support of the economy. So today, this morning, we'll talk about the individual provisions, perhaps the most important, automatic payments that the federal government is making to the individual taxpayers. They will begin the process of direct depositing these funds to taxpayers across the country. The amount is $1,200 per individual, $2,400 for tax return, joint returns, plus $500 per child. And it begins to phase out for incomes above $75,000 or $150 in joint income. So we already know, as you saw last week, over 6.6 unemployment claims were filed after a week of 3.3 million records on records. As much as we support business, we're going to have to rise in unemployment almost irrespective. And so this will include some fairly robust expansions of unemployment benefits, mostly important restrictions on eligibility for unemployment. Remember, if you go through unemployment, applying for assistance, there are qualifications about how long you've been employed, how long you have to wait. Those eligibility requirements have been amended as it's related to the coronavirus. In addition, the federal government is providing $600 on top of the regular state benefit through July 31st. States simply have to agree to accept this additional benefit for their residents, which Governor Wolf has done. A lot of questions have come up about whether individuals will remain on unemployment, particularly given the enhanced benefit. So it's important to remember that eligibility ends when an individual can return to work. So if an employer is reopening and calling employees back, and that employee is available to work, and they choose not to work, then their eligibility ends. So how do you access this? You still go through your state unemployment office. You don't go to the federal government. This is a state unemployment office issue. Okay, so let's talk about the major provisions for employers. We've really broken them down into 3 groups. The provisions that are available to all employers, the provisions available to large employers, then small businesses, the self-employed, independent contractors, and nonprofits, which is where we'll spend the bulk of our time this morning. So we'll start off with the provisions available to all employers. The first is a payroll tax provision for employers who payroll taxes. So think about this. Everyone who's writing a check to their employees, after you write that check, you normally write another check to the federal government covering the payroll taxes for both the employee and the employer side. So under this bill, an employer may choose to delay their payment of their portion of payroll taxes, which is 6.2% of Social Security wages. They can delay paying that between now and January 1st of 2021. If they choose to delay that, they have to pay 50% of the accumulated amounts they would have owed December 31st, 2021. And the remaining 50% on December 31st, 2022. There's an important caveat here. This is generally to all employers, except if you have had a loan forgiven under the Paycheck Protection Program. This is the small business program, which I will be discussing a little bit later in the slides. Other tax changes that are important, net operating losses or NOLs. If you have a business who has a operating loss and you want to be able to use that against prior taxes paid, now operating losses are expanded from 2018, 2019, and 2020, and generally can be carried back 5 years. This applies to pass-throughs and sole proprietors. If you're a business, this is primarily for corporations that have AMT credits. You can accelerate the recovery of those. You also have the opportunity to increase your interest deductibility for 2019 and 2020. And importantly, for restaurants and retail establishments who in the past couple of years may have made investment in their property, they can accelerate the recovery of that. All these provisions are really centered around one idea, improving liquidity for employers. At the moment, when employers have had no revenue coming in, it's really hard to pay the bills. So all these provisions give employers greater access to liquidity. So it's not so much about overall reducing taxes as it is timing, giving employers more access to the cash they have today to be able to pay their employees. Okay, so another provision that's available to all employers is the Employee Retention Credit. Now this is a late addition to the bill. The early draft did not include this provision. So as a result, there hasn't been a lot of attention paid to it. The retention credit generally applies to employers. We're talking about in businesses, but also non-for-profits, for example, who are fully or partially shut down because of the coronavirus, or who've had a 50% drop in their gross receipts in a quarter, and they're eligible for this until their gross receipts get back up to 80% of their prior year's amount. So think about this. This is designed to help employers who shut down or lost revenue, but who continue to pay employees. So how much is the tax credit worth? It's 50% of the wages paid by the employer up to $10,000 per employee. And that's a fully refundable tax credit. So think about it as a $5,000 tax credit available to the employer. There are special rules for employers with more than 100 employees and employers with less than 100 employees. So if you have more than 100 employees, the benefit only applies to employees who you are paying but not providing services. So a way to think about this is if your business is shut down and you've had a drop in revenue, your employee is not working, they're not teleworking, but you continue to pay them. You can access this credit as a benefit in recognition of the fact that you paid them. If you have less than 100 employees, though, the requirement that they not be providing services does not apply. It's available to all employees you pay during the eligible period. The eligible period being when you're shut down or when you have a quarter with this drop in gross receipts relative to the prior year. Importantly, again, here, the Paycheck Protection Program, this is that small business loan grant program that I'll discuss shortly. If you receive one of those loans, because it can be converted into a grant, you cannot take advantage of the employee retention credit. We understand that employers have cash flow problems, and one of the things for employers who take advantage of this is that we expect Treasury will continue to provide guidance that will allow employers to get in advance on the payment of the credit, which will help them pay their employees today. All right, so let's talk about the mid-size and larger employers. This bill in total $500 billion to the Treasury Department to support loans. Includes support loans and loan guarantees and Federal Reserve credit facilities. The Federal Reserve credit facilities, you may have read about them in the paper. These are things the Federal Reserve is creating, and for example, to support commercial paper, money market funds. They do these as regular course of business when we have a financial crisis. They were used robustly, for example, in 2008. So 454 of that 500 billion is going directly to businesses at large. There are special programs for the airline industry and critical national security businesses that make up that remainder to the 500 billion. So we've seen the Federal Reserve issue more guidance about these credit facilities and actually began launching them, including the terms and conditions. Remember, this is not going to be a situation where most likely a company goes directly to the Treasury Department or Federal Reserve. Instead, what the Federal Reserve is doing is supporting financial institutions in the United States to make more loans available. There are some restrictions that go along with this in the exchange for expecting the benefit. That would include stock buybacks by the company, so long as their loans are pending for an additional year, and it limits increasing executive compensation. Okay, so this is where we're probably going to spend the bulk of our time this morning, on small businesses, self-employed, independent contractors, and nonprofits. The provision that's getting the most attention is called the Paycheck Protection Program, which I've mentioned earlier. It's a $349 billion in loans for small businesses. It's generally defined as employers with less than 500 employees, the 501c3s, the self-employed, sole proprietors, and independent contractors. So a way of thinking about this is if your business is generally qualified for an SBA program, you are going to qualify under this program. In addition to that, some employers, some businesses who would not originally qualify have been added to that list. That includes, for example, independent contractors and the self-employed. It also includes restaurants and hotel folks who would otherwise be ineligible because if you add up their locations, they have more than 500 employees. Under this bill, it says we're going to judge you in the accommodation and food service business as on a per location basis. So don't automatically assume because you're not eligible for a regular SBA program that you're not eligible for the Paycheck Protection Program, PPP. So how much can you borrow? You can borrow up to 2.5 months of your average payroll expenses. There's a formula to calculate average monthly payroll. And once you calculate that, you can multiply it by 2.5, 2.5, except you cannot exceed a loan of $10 million. So where will you get the loan? A lot of folks are saying, do I go to the Small Business Administration, SBA? We do not expect that individuals will go to the SBA for these loans. Instead, you're likely to go to your local and national lenders. And there's quite a variety of them. Lenders who are already SBA 7 lenders, that is, they participate in the SBA 7 program, they're automatically able to provide these loans. In addition, the Treasury Secretary designated all FDIC covered banks, so your local or metro banks, will be eligible for providing these loans as well as credit unions. He also has the Treasury Secretary that is given the authority to designate other lenders, and we expect to see him continue to do so as he sees fit. There's also there's a very minimal requirement as far as underwriting these loans. There are no collaterals required. There's no personal guarantee required. And a really unique feature of these loans is that the loans can convert into grants based off what the borrower spends money on. Again, they can convert into grants based off what the borrower spends money on. So a way that the bill is laid out, it looks at 8 weeks of your expenses after the date of the origination of the loan. So you kind of calculate everything that you spent on payroll, that you spent on rent for business, that you spent on mortgages that are tied to businesses, and what you spent on utilities. And you can get dollar for dollar forgiveness of your loan up to the amount. So again, it was payroll, rent on businesses, mortgages on businesses, and what you've spent on utilities. Of course, your forgiveness cannot exceed the amount that you actually borrowed. So there are some conditions. Your loan forgiveness is reduced proportionally if you reduce the number of full-time employees that you had relative to a benchmark period. So there's 2 benchmark periods, either the year before or the first 2 months of this year. A loan forgiveness is also reduced if you reduce wages for employees making less than $100,000 by more than 25%. But that's a good note about wages above $100,000. In your calculation of expenses, payroll expenses, if you count the first $100,000 that you paid an employee but nothing beyond that, this is really targeted at middle income earners. So employers can avoid a reduction in the forgiveness because we know that a lot of employers had to lay people off. But if you bring back those employees and restore their wages, generally within 30 days, maintain those employees and maintain those wages through June 30th. So a way to think about this is what the government is incentivizing is it wants to give money through small businesses, money to keep paying their employees. So we often get asked, what if the business is shut down or what if you happen to be in the area where, Governor Wolf has said the essential business can't open. That doesn't matter for this purpose. What the loan is looking at after you taking the loan, were you paying your employees? Remember, the goal of lawmakers in creating this Paycheck Protection Program was to provide assistance, essentially in the form of grants to small businesses, and encourage those small businesses to keep paying their employees. Okay, so you can learn more about this program. The U.S. Chamber released a really great 4-step guide to prepare you for applying for these loans, including the link of where to go. It goes through in detail who is eligible, how you calculate your average monthly payroll cost, what your lender might be looking for when you show up for applying for a loan, in addition, how your forgiveness is calculated. I've already gone through this with a couple of businesses who've said that it's very easy to understand. One of the things that we're doing at the U.S. Chamber is encouraging the small businesses to really understand whether they're eligible for this program, and think about what loan forgiveness might look like in your situation on the back end as you make a decision as whether or not to apply for one of these loans or grants. So as you can see, that's at www.uschamber.com/SBloans. All right, so there's another provision that benefits small businesses, the self-employed, independent contractors, and non-for-profits. That is the Small Business Administration's Economic Injury Disaster Loans, or more commonly just referred to as EIDL loans. The EIDL loans have been around for a long time. If you happen to have been affected by a tornado or a flood or some other natural disaster, for example, you might have applied for and received an EIDL loan. So who is eligible? Small businesses and nonprofits, including faith-based. There are no restrictions here for the types of non-for-profits. It's any entity that a nonprofit that has fewer than 500 employees. And again, here, sole proprietors and independent contractors are available for this loan. But this is an actual loan. This is not a loan that in general converts into a grant like the PPP. You can borrow up to $2 million in working capital. That's repaid over 30 years. And you can see the interest rates there of 3.75 for for-profits and 2.75 for non-for-profits. And if you take out this loan, payments are deferred for up to a year, so you don't have to immediately start paying on this loan. They made it easier for businesses to apply. Your loan is going to be based on your credit scores. You don't have to immediately produce tax returns. You can get up to $200,000 without personal guarantee, and no collateral is required for $25,000 or less. Beyond that, there is a general security interest, or sometimes it's secured with real estate, but we're seeing that they're trying to move away from real estate for this particular instance. There's an important feature that's brand new to the CARES Act. If you are applying for EIDL loans, one of these injury disaster loans, you can request that you be provided an emergency grant, which they have to provide within 3 days of up to $10,000. So the bill details what you may use for the grant, but there's no requirement of exactly what you need to spend it on. The $10,000 grant does not need to be repaid even if you are denied the loan. So if you're applying for the EIDL loan, you request the emergency grant, you receive it, then you're denied the loan, you still do not have to pay back the $10,000. You should essentially think about this as an emergency grant for small businesses. So there's some important interactions with the Paycheck Protection Program mentioned earlier that we Importantly, for example, if you end up with both, you generally would end up with both because you've already gotten an EIDL loan since they've been out for a while. Maybe now that the Paycheck Protection laws have been set up for those of you applying, you can roll them together, but you can't get double forgiveness for the $10,000. That would come off the Paycheck Protection Program's forgiveness. There's also some requirements with respect to Paycheck Protection loans that you can't double dip. In other words, you can't take out two loans to pay the same bills. So that's something you should want to think about if you're going to want to think about going through those restrictions. So don't assume you can do all these programs and just stack them up. What they have done is make the Paycheck Protection Program most favorable and then tacked on other programs that don't avail themselves to the Paycheck Protection loan. That includes the EIDL loan. So you don't have to apply for this loan by going to your local bank. You can go to the small businesses website at sba.gov to apply. They made it pretty simple and forthright in applying for them. This is also the loan that 501c6s and other 501cs can apply for. Chambers can also receive the employee retention credit, but they have to be substantially shut down or that reduction in revenue relative to the prior period. So you'll want to think about that for any chamber folks on the call when you do your taxes. So I want to go back to the Phase 2 bill because I think there were some pretty important paid sick leave provisions that don't necessarily come out of the CARE Act. They came out of the Families First Act, which was the prior bill passed about a month ago, again referred to as the Phase 2 bill. What the Phase 2 bill included was a requirement that employers with less than 500 employees provide paid sick leave. That's 10 days of paid sick leave to their employees if it's related to the coronavirus. Sick leave is taken when you're ill or when you're quarantined, or you need to take care of a family member who is quarantined. If you're taking care of a child because the school or daycare closures, as we've seen. So leave is paid at the regular rate, which is a maximum of $511 per day. Unless you're taking care of a family member, then it's 2/3 the regular rate with a maximum of $200 per day. Importantly, the federal government will reimburse the employer 100% of these costs up to the daily maximum that you pay your employees. That is refundable tax credit. We understand that businesses have liquidity problems as well, so the Treasury Department is allowing businesses to request in advance on that refundable credit so that you have the resources to pay employees who are taking the sick leave. This is in addition to what the employer already provides, including what you provide pursuant to Pennsylvania state or your local laws. So there's a lot of talk about what about businesses with less than 50 employees being exempt. The law does provide that an employer may be exempt, but they can only be exempt with respect to leave that's tied to caring for a child whose core daycare is closed, or to the extent that if providing leave threatens the viability of the business. If this applies to you, you should check out the Department of Labor's guidelines that they're posting on their website at labor.gov. Finally, paid sick leave is generally not available for an employee where they can telework. This only implies if the employee is taking care of, for example, a child, and they can telework, for example, by staggering or changing their hours. Okay, kind of getting to the last part here. The bill, the Phase 2 bill also included paid family leave, or FMLA, for those not familiar. It's the Family Medical Leave Act. It's a law that generally allows 12 weeks of unpaid leave. So what the Phase 2 bill did say, that with employers with less than 500 employees, that they're required to provide 10 weeks of paid family leave. If the employee needs to take care of a child due to school or child care closure caused by the coronavirus. That's the only reason for extended leave. So when you think about the interaction between this and sick leave, an employee probably would have taken 10 days of sick leave first, and then would be eligible for 10 weeks of paid leave. Here, the paid is at 2/3 the regular rate, again, $200 per day, $10,000 in the aggregate. It is in addition to what you already provide under state and local law. Again, it's fully reimbursed the same way by the federal government. There are similar exemptions for employers of fewer than 50 employees, same as paid sick leave. And it doesn't apply, again, to an employee who can telework. And in conclusion here, the uschamber.com is a lot of great resources, including bill summaries for the Phase 2 and Phase 3 bills, as I'm sure we might move along to a Phase 4. And in particular, CO is a chamber program that focuses on small businesses and has several tips and guides and other things that are available for small businesses. That website is uschamber.com/CO. And again, a reference for that PPP guide is at uschamber.com/SB loans. So I know that was a bit of a whirlwind, and I'm happy to take any of your questions and answer them the best that I can.
Ryan, we have a question from Marissa. I'm going to unmute her. She wanted a clarification between some of the programs available to types of nonprofits.
Sure.
Hey, Ryan. Are the tax credits and the EIDL loans available for all types of nonprofits, 501c3s, 5s, and 6s?
Yeah, so the EIDL loans are available for all 501cs. And then I don't know, did you say PAC credits?
No, the tax credits.
Oh, yes. So the tax credits and the EIDL loans are available for all 501cs.
Awesome. Thank you.
Okay. And then we had a question typed in the chat here. What documentation is needed for the Paycheck Protection Program loan at the time of the application?
So if you go to the guide at SB, at uschamber.com/SB loans, it provides you with a link to how you would apply. It is on page 2 that hopefully I'll be able to share with Kara. It's a 4-page guide that includes Social Security, your EIN number, Social Security number, and it's pretty much a checklist of how you're applicable for the loan. But with regard to any other sort of information that you may need, I would suggest calling your local lender, such as your local bank that you've had a relationship with before, to make sure, 1, they are providing these loans, and then 2, what other sort of information that you will need to provide when you're going to apply for the loan.
Great. And a question here on the individual stimulus check. The question is, would a college student over the age of 18 that is claimed as a dependent by his or her parent not be eligible for the $12,000, or would the parents get that $500 as a dependent?
That's a really good question. A lot of these webinars that I'm coming on are really specific ones that I'm not sure of. I would be happy to look into, Kara, if you don't mind recording that question, and I could look into it and try and get you an answer today.
Okay, yeah, we'll forward that on to you. And then we have a question here from John Sider. Does the U.S. Chamber have any information on what non-bank financial institutions might be taking Paycheck Protection Program applications in the future?
Could you repeat the question? Sorry.
Sure. Does the U.S. Chamber have any information on what non-bank financial institutions might be taking Paycheck Protection Program applications in the future?
Sure, we have a list of eligible, including, as I alluded to, credit unions. We are gathering lists of what sort of financial institutions are able to provide those loans. I could send you that list after this that you can hopefully disperse to everyone on the call.
Great. And then a question from Paris. I did a Google search for SBA disaster relief loans and clicked on a link that appears to be valid. There is an online form to fill out, but at the end, they ask for the name of your bank, routing number, and account number. Does that sound legitimate?
If you're at sba.gov, that would be legitimate to me. I wouldn't be worried about that as well.
Okay. Other questions? And a reminder, you can also raise your hand in this feature as well if you'd like us to unmute you. Okay. Well, Brian, it doesn't look like we have any further questions. So as a reminder, we have recorded this, so we will get the recording out to all of you later today, as well as the PowerPoint. And those questions that we were going to follow up on, we will send those out as well. Thank you, everybody, for joining us.
Thank you so much, Kara.
Thank you, Ryan.